Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, April 1st, 2011. Well, folks, the first day of the second quarter 2011 is underway, and again, the markets are having a solid rally higher. We have rallied up sizably with the Dow Jones Industrial Average trading up 93 points, NASDAQ up 20, and the S&P 500 up about 11. That's about 0.75% across the board, which again is really the third day this week we've had a sizable gain of between 0.5 and 1%. Now, again, the key to today's action has to be the jobs report. The jobs report came out this morning giving us non-farm payrolls of 216,000. That's a second gain in 2 months, or 2 times in a row. We've had over 200,000. The first time that's happened in a couple years, and again, the market's loving that action. It was kind of the perfect number. I discussed yesterday to my members, if we got a 250 to 300,000 number, then the Federal Reserve would be kind of in a pickle in regards to pushing for further assistance to the market, meaning that QE3 or QE2 remaining might have to stop or stall out. So that was a bad thing if we got it too high. If it was too low, the markets would be a little nervous about maybe the economy's not recovering, but at the same time, you could have QE3 on the table. So this number came in right between, just over 200,000. It was kind of the Goldilocks number, if you will. Neither too hot nor too cold, just right. The markets enjoyed it. Again, a little bit of a gap up into resistance here. Key level of resistance on an intraday basis at 133.45 on the SPY. At that point, you pulled back. You came down, piercing the pivot top from 2 days ago and coming into the highs from yesterday. At that point, the market found good support. It just so happened that the dollar was spiking dramatically higher, and I mean dramatically, folks, as the markets were selling the first 20 minutes of the day, and then the dollar made a huge U-turn and started to collapse, and that's what has helped the markets move up. Now, as the markets moved up, we ran into a master level, and this is the big one of the day, folks, 133.70. 133.70 is a massive resistance level, best seen on the 60-minute chart right here. And again, you can see clearly right up in this range right here. And again, let me zoom out and show you what I'm talking about. Look at this level. All right, and again, let me just erase this. I want to show you this even more on a level of just understanding how big of a level this is. Take a look. If I put in this longer time frame chart or a trend line, look at this. Connect this through, and right there. So not only do you have a pivot top going back to this date in the 3rd of March 2011, but you also have the pivot high here on the 1st of March and going back to the gap window high on the 22nd of February. Major level, folks. Again, a 3-pronged attack there of resistance, and that's what the market's hit multiple times today. Each time it hits it, it's pulling back. And again, let me just draw those lines across so you can see it. I can even zoom in a little bit more. But look, 1, 2, 3, market goes up into it, and then it stalls out. Makes sense, right? Again, major resistance up in that range. So right now, that's what we have. Markets, again, have had a nice rally today. Things up basically 0.75% across the board, but you are into resistance here on a daily basis. Now, if you get through this point, where you're going to go up to the high of 134.15 or so, 134.20, and then if you get through that, you're going back to 134.70, which would be the 52-week highs. We are very close at this point. We're about $1 away from the 52-week highs on this market. And again, we made great money on the way down, and again, we reversed with capitulation move down here from members of the Research Center and made money on the way up. I am getting close to thinking about a short again on this S&P. And again, we made money last time on the fall on the S&P, and again, reversed to the long side afterwards. But again, I am getting a little bit close to thinking about a little bit of a short on the S&P at some point in the next week or so. I'm going to watch the charts very closely. I encourage you to take the free trial of the Research Center, because I will put out the alert. You'll get a text email alert, assuming you sign up for those and you're part of the Research Center. And again, I do encourage you, take that free trial. This is the time, folks. This is when we're getting close to a level where we could see a good action in one way or the other, and I want to make sure we're ready for this and ready to make money like we have been doing over the last couple months in this market beautifully. All right, so again, those are your levels. Going back to the intraday, you can see this level working again beautifully. Nice little, that 133.70 level still working nicely on the charts today. All right, let's look at a couple other keys today. First of all, remember how I discussed the dollar initially was ripping higher and then reversed dramatically to the downside? Take a look at this, guys. Here's your initial move up. This is where the markets actually came in. Remember, if we go back to the spiders, and this chart's amazing. I love this stuff, folks. This is so hardcore and awesome stuff. Remember that dollar I just showed you just spiked the first 20 minutes? Look at what the market did. And then the dollar has since collapsed. Look at this fall. This is a monumental collapse in the dollar, folks. It's only back to the flat line, but we had a huge gain on the dollar today. And it's been 100%, I repeat, 100% wiped out. I wonder who's behind that one. Federal Reserve. Federal Reserve. In any case, not surprising, folks. And again, it's such a tricky thing here. You have, obviously, the printing of money continuing, POMO's continuing, the dollar continuing to just show signs like it wants to bounce, and then it just collapses right back down. There's talk about raising interest rates by the end of the year by Fed officials. That didn't even bounce the dollar here. The dollar just came right back in. So, I mean, you saw the initial bounce on that talk, but it just reversed right back down. And that's helped the gold and silver charts reverse. I mean, you still have gold down, but look at the reversal on this thing. Gold was getting crushed this morning. And now it's all the way only down 73 cents. Silver, take a look at this. Getting crushed early, it is now flat on the day. Here's your gap fill. This is actually minor resistance, but if the dollar goes lower, silver's going to end up going higher. There's no doubt about it on the SLV chart here. Crazy, crazy action on the dollar today. And again, for a Friday, the markets are relatively quiet. The volume is going to be light, but the dollar and the commodities are just going nuts today because of what's going on in the currency and commodity arena. All right, and Japan's quiet. I mean, Japan's a mess, and it's a horrible situation, but the effects on the global market, or at least on the market here in the U.S., are very limited at this point because it seems like the information is out there, and it's as bad as it can be. No one really thinks it could get any worse, although maybe it could. Hopefully it doesn't. Middle East is still a mess, but you know what? It's not spreading. We're not seeing it spread to Saudi Arabia, so it's just Libya right now, really, at this point. So that's fine. And you know what? Europe looked scary early in the week and late last week, and now there's not a word, not a peep. I repeat, not a peep out of Europe. So, what are you going to do? The markets are enjoying it. The markets are enjoying the peace and quiet right now, and that's helping the rally in the markets. All right, and again, let's take a look at the USO here, the oil fund. Look at this, moving up. Not surprising because of the collapse in the dollar, folks. I mean, oil's continuing to go up. This is actually big because you're now taking out the pivot high. This is actually possible confirmation on this, which could tell us that we are going to go higher. We may be headed towards 110. I do think at 110 the markets may get a little nervous on oil. Right now we're not quite there yet, but you can see we have taken out and confirmed. Assuming we close up here, this will be confirmation above your 2010 pivot double top finally. And again, it could set up for a move to 110 on oil and possibly even higher. And again, fill up your gas tanks if we are going to break out to the upside, as again, oil and gas should be going up even more so than we've seen it lately. And again, eventually that's going to work against the market and the economy. It's going to be a tax on that, but not in the short term anyways, it doesn't seem. So we'll see how it goes. We'll see what happens. Let's take a look at a few different stocks. Chevron had a huge reversal yesterday, but today it's moving back up a little bit, up $1 or so on the day. That's on the back of stronger oil and a rally in the markets. Also, money flow at the first day of the quarter. Remember, first day of the quarter, usually you have money flow in funds because a lot of people can invest more money for the quarter. Every quarter you're allowed to put a certain amount into, an IRA or a 401k, so you'll see money flow like that, which is also part of the reason, in my opinion, for a little bit of a rally today. I think this could last into Monday unless something crazy happens over the weekend. But once you get through Monday, it's going to be a big, big issue. We're going to start watching the charts very, very closely. And again, I encourage you to take that free trial of the Research Center to get in-depth analysis. Really be ready because, again, the key is to play the moves up and down. I'm neither a bull nor a bear. I'm just looking for the charts to tell me which direction short-term the market's going to go over the next week or two, and I'm going to position myself that way. That's why we nailed the move down in the markets off a key pivot and master cycle pivot call. And then again, as soon as I saw capitulation on the spiders, and let's go back to the spiders chart, I saw it right here and I called it out. I said, guys, this market's going to bounce, and look at the move up. It's been a huge move up, in fact, almost back to a double top. Double top is going to be resistance, by the way, on the daily chart. No doubt about that. All right? So keep an eye on that. Other stocks in motion. Amazon continues to have a good day and a good week. Take a look at the Amazon move. I do think Amazon's resistance is going to be coming in shortly here, and then you have gap fill just above. So these levels right here, those are going to be very, very good. All right? So watch those very closely on Amazon.com. Apple Computer continues to be weak. I've talked about this all week long. Yes, it's consolidating in a bullish manner here, but in all fairness, a lot of the week this week was a rally, and Apple really went sideways to lower. Even today, Apple's up a little bit, but compared to the market, it's barely up. Apple's up 0.25%, market's up 0.75%. So underperforming Apple. Granted, as long as it stays above these two moving averages, it's still slightly bullish consolidation, but either way, not what you'd expect from Apple, that's for sure. JP Morgan, Goldman Sachs having good days today. Very nice day on Goldman. Goldman hitting the 200 moving average on the daily chart down here and bouncing back up. Nice move there. And again, Intel's actually weaker today. Dell's weaker as well, so we're seeing a little weakness in Dell and Intel. Hewlett-Packard also slightly weaker. Those are three stocks that are lagging. Solar stocks lagging as well today, FSLR. There's been some talk that demand may not be as strong now as we are seeing some of the helping hands from governments stall out in regards to solar. But either way, solar is a little bit weaker today. As long as oil continues to go up, solar should still remain relatively strong, though. It makes sense. You know, the more pricey oil gets, the more likely you'll spend money on an alternate energy like solar, because obviously it's cheaper relative to that oil price that continues to incline. All right. Ford Motor Company, I nailed this call yesterday. I think even talked about it in the research center, in the intraday video. I put a post up on the blog. You can go find it yesterday, talking about the bull flag pattern on the Rant and Rave blog. You can go find that post yesterday. I said this is a buy based off of bullish consolidation. Take a look. You're already in the money, about 35 cents on Ford here from the call yesterday. It was a great call. And again, just noting the in spirit of bullish pattern there. Beautiful move. All right. And again, hopefully some of you guys caught that, as it was a great trade. Enough for today, folks. Again, the weekend is here. I'm going to enjoy. I hope you enjoy. Come join the Research Center. Take that 1 week free trial. Take it of the chat room if you want as well. It's there for the taking. It's there to help you make money, to help you get a sense of what we're all about. Test us out. Make some money. Join us for life. Take care.